AMC and GME are heating up again. But before you ape in and hope for another moon mission, let me tell you how I watched six figures in unrealized profit disappear in 2021, and stick around till the end to see what I'm doing differently this time around. If you're into real talk about stocks, strategy, and surviving market madness, like, subscribe, follow wherever you get your podcast, and now, let's get into it. Welcome back to StonkCast, the market show for the average Joe. Whether you're a diamond-handed degenerate looking for the next 500% play or a more conservative swing trader or investor, we've got you covered. We tackle the latest market news, give our 2 cents, and maybe, just maybe, help you make some money along the way. I'm your host as always, Brandon Shar. Welcome back. It is Friday, May 23rd, Memorial Day weekend. And folks, I felt like in light of some of the meme frenzy that we've been seeing rekindled in GameStop and AMC, I felt like it was an appropriate time for an impromptu video, just talking about, I guess, my experience back in 2021, specifically with AMC, but really just the meme frenzy as a whole, GameStop, AMC. Talk about some of my failures and talk about what I'm doing differently this time. And hopefully, if you're out there and you're involved in these meme stocks right now, hopefully this can help you. So first of all, let me rewind back to 2021 when I was deep in the meme stock madness. I bought in fully on AMC back in February. I had shares, I had calls. I dabbled a little bit with GameStop, but I felt like I had missed that boat at that point. And so I hopped on AMC. I rode that for 3 or 4 months until we got a massive squeeze over the summer, right after Memorial Day weekend. Funny enough, almost 4 years ago, when AMC skyrocketed to over $72. In a single day. I think it went up as high as 100%. And I did not sell, folks. I did not sell. I did not have a plan. And that's really the purpose of this video, is to share some of my failures. And hopefully, you can learn from it. This go around, if we end up getting another type of, similar short squeeze on either GameStop or AMC. But I was fully bought in. At one point I was up over 6 figures, and I found this really funny well, not funny, it still hurts to look at, but during a halt on June 2nd, which was the day that AMC in 2021 went up an insane amount, over 100%. I remember being at work and just staring at this number here during a halt, over $420,000. Now, of course, I couldn't sell for that price. It was halted. When it unhalted, in reality, I was up probably about 120, 130,000. But either way, it was a very, very significant move for something I had been holding since February. And I didn't sell. And the reason I didn't sell is because I was bought into the meme frenzy. And if there's anything I want you to take away from this video, it is that when you are trading, whether it's meme stocks or otherwise, you need to have a plan, right? So I didn't lock in gains because of FOMO, really, and the diamond hands culture, right? And don't get me wrong, the show is called StonkCast for a reason. Like, I enjoy the meme culture, Wall Street bets and all that. I think there is a lot of good that comes out of it. I obviously named my show after it. But with that being said, you need to have discipline in the market regardless of what your trade is that you're going into. Even if you get it off of some crazy Reddit named guy, you still need to have a plan, right? It's up to you to have a plan in the market so you don't get your face ripped off. So I didn't lock in my gains back in 2021 due to FOMO. I was afraid that AMC was even going to go higher and I'd miss out, right? I was afraid it was going to go to $100 and I'd be sitting there thinking, man, I've been holding this thing since February, was underwater for a good portion of that before it turned around. What if this thing goes higher and I sell now and miss out on it? FOMO is so dangerous, right? Also, the diamond hand culture. All the feeds that I was paying attention to in 2021, everybody was saying, don't sell, don't sell, don't sell. There was no plan. There was a plan. The plan was just to hold on, which really wasn't a plan. And so, this go around, things are obviously different for me now. But for those out there who may have not been a part of that or got into the meme frenzy thereafter 2021, you need to have a plan. And how it felt watching AMC reverse and fade on me after seeing that unrealized gain I could have had after holding for almost half a year, man, the stomach, the gut stomach feeling that I had over that did not go away for a long time. Not to mention the psychological, just warfare and damage that I did to myself over that. Those are real things. You ask any trader out there, some of the deep cuts, deep losses that they take, right? It takes a psychological toll, and it takes a while to get over that and really build up the proper professional trader habits, right? As far as risk management, and realistic expectations on gains and setting proper stop losses, things like that. So it definitely cut deep. But from my perspective and the whole point of this video, if I can share something that helps somebody out there, then I want to do it, right? So what I learned from that experience, looking back, what I wish I had done, and what I've learned, I guess, the hard way, right? So having an exit plan before the pump. Before you even get in, you need to have an exit plan. So important. Also, understand the difference between narratives and reality, right? So the narrative back then, as I was saying, was, shorts haven't covered. You need to hold. It's going to moon, right? Looking back on it in hindsight, that narrative, in a sense, was correct. It did moon. It went up to $72, all the way from a measly $1-2 back in April of 2021. That is a short squeeze, right? So the narrative was it was going to go much higher, when in reality that was the short squeeze. So you need to be mindful of that, in my opinion. Also know your time horizon and what your risk tolerance is. Make sure that if you're in a day trade, it stays a day trade. It doesn't turn into a long-term hold, right? And know your risk tolerance. That's so important. Don't put your entire portfolio into a meme stock like I did in 2021. Yeah, because for a moment it did pay off. It's a high risk, high reward, but I didn't capitalize on it. And it's just poor risk management. It's not a way to stay in this game for the long haul if you enjoy the stock market and you have a passion for trading like I do and you want to do this for the long haul. That's not the way to do it. So looking at AMC and GameStop now, I want to take a look at what's different this time. So the reason I'm looking at this again, and I should also say, I haven't really been paying much attention at all to AMC really since the end of, 2021, beginning of 2022. It's been off my radar for a while until I just randomly happened to look at it back on Thursday last week when it got this very odd spike in volume and broke above the 50-day moving average for the first time in about half a year. That's what put it on my radar. So it wasn't just simply somebody on, some social media feed saying, hey, we're going to the moon, you need to buy the shorts are piling in, they haven't covered, let's burn them, yada yada. It wasn't just that. There was a technical basis for it. Again, getting above that 50-day moving average is a bullish signal. So I put it on my radar, ended up buying some calls on it. I bought some $3 calls expiring in June 20th, I believe. And I also bought some $7 strikes that are a bit further out that expire in September. So looking at AMC, this is a bullish move right now. And that's the reason why it's on my radar, right? That's part of my thesis. Also looking at GameStop. GameStop is also looking bullish. And honestly, I would say this chart looks better than AMC's. It's above the 50 and the 200-day moving average. It's curling back up. And we have this level of resistance really dating back to 2021, 2022. This $35 price level is one that I'm watching very, very closely for GameStop. I started watching this once I took my AMC position. I saw AMC was moving and basically realized that, you know what, if one is moving, the other is typically moving, and that is the case right now. They kind of run in tandem as meme stocks. And so I took a position on GameStop, an appropriate position, I should say. I didn't put my whole portfolio into it, but basically I'm looking for, I bought $55 strikes on this that expire in October. So I have plenty of time on this to get moving, and I'm already up 50% on that position right now. And yes, I do have an exit plan, which I will get to. But I want to put these two stocks on your radar and, hopefully help somebody out there be able to get a trade idea, first of all. And secondly, before, they start doing research and go down a rabbit hole of meme frenzy, hopefully you can learn from some of my mistakes 4 years ago and actually have an appropriate plan this go around, right? So want to look at some of the things that, the internet, I guess, is saying right now about AMC, about GameStop. They are getting a lot of interest right now. And then we will also take a brief look at the short interest. Gosh, every time I see this picture, over 420,000, it just makes me sick. Anyways, let's take a look here at this news article from FX Leaders. GME stock eyes $45, then $65 as GameStop blasts past $30 on DBK, AG, Bitcoin hype. So GameStop stock has staged another sharp rally, surging on renewed crypto enthusiasm, a massive institutional investment, and speculative. So always got to keep in mind, AMC, GameStop, they are both speculative plays at best, right? That being said, however, I would venture to say GameStop has better financials than AMC. So it's a bit more of a stable play. I want to use that word cautiously, but just some quick notes here from this article. GameStop stock surged over 10% amid renewed crypto enthusiasm and significant institutional investment. Deutsche Bank increased its stake in GameStop by over 1,000%, adding credibility to the stock's momentum. GameStop confirmed plans to hold Bitcoin on its balance sheet, aligning itself with digital finance trends. Investor interest has been reignited by Roaring Kitty's substantial position in GameStop, targeting the $65 level. So basically, Roaring Kitty, I mean, the granddaddy of them all when it comes to leading the meme frenzy. He is the OG when it comes to meme stocks, and specifically, of course, GameStop. Pretty much ignited this whole movement back in late 2020. He's essentially eyeing GameStop doubling in value, doubling its stock price from where it's at now, again, with that $65 level. And the interesting thing about GameStop right now is the fact that they have Bitcoin on their balance sheet. They're using it as a reserve, and Bitcoin is up right now and made a new all-time high a couple days ago. And so it kind of makes sense based off of that why GameStop is going up, right? So to me, that's part of the reason why, even though I got scarred by meme stocks back in 2021, I feel like, the thesis that I'm seeing based off the information, I'm getting check marks, right? Technically, based off the charts, and also with the news and the crypto investments, it all kind of lines up to me, and I like the setup. I guess that kind of similar to Roaring Kitty, right? When he had that hearing and he's like, I like the stock. Well, for me, I like the setup. So, that's kind of my stance right now with GameStop. So basically, right now, and keep in mind too, GameStop is a company, a very interesting company. I mean, they did have a dip in sales. They've had to close down some of their brick and mortar shops around the globe. But that being said, they have a lot of cash on the balance sheet, folks. And the fact that they are now, investing in Bitcoin when Bitcoin is flying high right now and is viewed by a lot of folks as a super, super awesome long-term play that is going to be, kind of uncorrelated from equities. It's a good move for the company, basically. So that's, the news, I guess you could say, on GameStop right now. As far as AMC, it's seeing high options activity with bullish undertone, according to Guru Focus. So shares of AMC recently declined by 2 cents, settling around $3.23. The options market showed significant activity with trading volume nearly tripling. The daily average is 83,000 contracts changed hands. So it's getting action on the options chain. We're going to check in on that. But also, let's just remember what AMC is. AMC is a movie theater. Right now, we are in one of the best times of the year for movies. So they got a lot going on right now. You got Final Destination. You got Lilo and Stitch. My daughter just went to see it today. Theaters are packed for these. Not to mention Tom Cruise, Mission Impossible. Who doesn't love Tom Cruise, right? So, there's a lot of good things going on right now. A lot of opportunity. Some of the box office numbers coming out already for AMC with some of these releases like Final Destination have been great. And I would expect that to continue over the summer as we get new movies coming out. So really, from a news standpoint, GameStop and AMC both collectively have good news coming out right now. And they are setting up, technically speaking, from the charts as well. Looking at the short interest for AMC right now, according to Fintel, short interest is 14.50%. That is high. Days to cover, 4.74. If we look at GameStop, short interest percentage, 11.93%. That is also high with a short interest ratio of 5.91 days to cover. So you got two companies that are back in the limelight, positive fundamental news, and you also have high short interest as well. So, to me, that's why I'm involved in both of these. And with that being said, unlike 2021, I do have an exit plan for these two plays right now. Obviously, I have some time on my side with, both of these plays. The $7 strikes for AMC expire in September. $55 strikes for GameStop expire in October. But with that being said, let me just give you a quick rundown of how I'm looking at, these two plays and basically what my plan is as far as an exit strategy, just briefly, right? Just to give you an idea. So for AMC, I want to see a spike to $3.75 to $4, which would be right around the 200-day moving average. Basically, if we look at the chart here, $4 is going to be a key level of resistance, right? So for me, I'm currently holding, 5 contracts for the $7 strike. We get a move up into this region up here. I will be selling, 2 to 3 of those contracts into momentum, right? While the implied volatility is likely high, when it's spiking. If AMC, however, fades below $3 and IV, begins to contract or drop below where it's at now, I will look to sell 2 to 3 contracts to lock gains and reduce exposure. Also, if the premium on my contracts doubles, then I'll be looking to, sell at least, 3 of those contracts. Another thing is if we get past August 15th and we're still under, let's say $5, that's another scenario where I will be looking to sell the remaining contracts to avoid any rapid theta decay or time decay. Again, these expire in September. As far as GME goes, my contracts are good until October, so I got a little bit more time than I do on the AMC play. I'm looking to see if GameStop can push to 35, this key level here. or, premium hits basically double what I bought it at, I'll be looking to take profit or scale out partially there. If GameStop drops below $28, that's a scenario for me, based off of what I'm seeing, where I would look to exit my position, or at the very least trim a little bit of it, especially if I see the implied volatility starting to drop below 90%. Or if my premiums double on these contracts, that's another place where I would consider trimming. And then past mid-September, if we're still under $40 at that point, that's when I would begin to get out, so I can avoid IV crush, implied volatility crush. So that's something that I didn't have. What I just laid out right there, that's called a trading plan. That's something I didn't have in 2021. And I would highly encourage you, if you are in any way, shape, or form involved in these two meme stocks, to have that plan, right? Just diamond-handed mentality, having a diamond-handed mentality, just holding it and hoping it goes to the moon, that is not a plan. Okay. That's hoping. That's hopium. And you know what hopium gets you? It gets you what I got in 2021, which is a whole lot of nothing and a whole lot of regret, right? So make sure you have a trading plan in place. Very, very important. So how you should be thinking about these stocks moving forward. They are setting up very nicely on the charts. You got volume picking up. If you look at the put to call ratios on both of these right now, they're great. A lot more calls being bought than puts. That's a great thing to see. You want to see that continue. And as far as the IV percentiles for both of these, they are both below 40%, right? Meaning 40% of the time, the implied volatility for these stocks has been lower over the past 52 weeks. So basically what it's saying is, if you're a buyer of premium like I am, if you're expecting this to go up and you're buying calls, you want that implied volatility relatively low compared to the past 52 weeks. That way, if we do get a big move, implied volatility goes up. It gets ballooned, right, as your contract values get ballooned, and that's when you want to sell. So as far as the options chain, as far as the news, as far as how the charts look, as far as the short interest, there's a lot of check marks, in my opinion, to at the very least have these on your radar, right? Whether or not you get involved is up to you, of course. Even if you didn't get burned in 2021 like I did, this is how you can approach these setups with a real edge, which is what you need in the market. Hope isn't going to get you anywhere. You need a real edge. You need a real game plan in order to succeed and stick around here. So if you've been in the trenches with meme stocks, or you're just trying to play it smarter this time around, definitely drop a comment. Let me know what your thoughts are. Did you lose any money in 2021? Are you involved in these now? Do you think they're going up? Do you think they're going down? What do you make of the short interest? What do you think of some of the conspiracies out there, right? About all these hedge funds that still haven't covered from 4 years ago. Would love to get your thoughts on this. What's your plan for AMC and GME, right? Make sure to hit that like button if this hit home for you, right? Subscribe for more grounded stock talk, and follow StonkCast wherever you listen to podcasts. I will be back tomorrow on Saturday for part 4 of the Intelligent Investor series. If you're interested in long-term investing, I highly recommend checking out this mini-series we've been putting out. Parts 1, 2, and 3 are already out. We're tackling Benjamin Graham, the author of The Intelligent Investor, the mentor to Warren Buffett, one of the greatest investors of all time. And tomorrow, I'll be basically covering how you can, in real time, look for companies the way Benjamin Graham might do it today. And then Sunday, I'll be back for the usual market recap as we head into a shortened trading week. As a reminder, Memorial Day is Monday. The markets are closed. But I hope this video was helpful. And thanks as always for the support. And remember, folks, plan the trade and trade the plan. Have a good night.